I can't tell you exactly where I'm going to be in 5 years, but here's what I can tell you we are going to get to. We are going to be a $10 billion revenue company with a 30% operating margin, with at least 75% of our EBITDA converting to free cash flow in the years to come. And by the way, all I have to do that.
Okay, I'd like to welcome back for the second time David A. Steinberg, the CEO of Zeta Global. David, it's a pleasure. Thank you for being here.
Nick, I want to be very clear. My first time was your first time. We did your first time together. And in that period of time, you have ascended from being Nick to being Mr. Zeta. So I'm very honored to be on the phone with you or on the Zoom with you, and looking forward to it.
I'm honored too. It's quite the title. It's quite the title. And full transparency, anybody who's watching this, I did not assign myself that title.
I just see
But
it all over X. Every
yeah,
time they quote you as Mr. Zeta.
Mr. Zeta. Okay, so what I'd like to do is start off by saying, what a freaking quarter. Seriously. GAAP
Yeah.
profitable, 25% year-over-year growth, top line growth. You guided for a Q1 growth of 40% year-over-year, and a mid-range guide for 2026 full year of 35% growth year-over-year.
Yeah.
That's
It's
remarkable.
it's
Congrats to you and the team. Honestly, just take
yeah.
a moment there. Like, honestly, what a quarter.
Let me start by saying I am so incredibly proud of our team. Like this was a team effort, and it's you don't get to this point by waking up one day and saying you want to do something, right? It takes many, many years of hard work. And I was reflecting on this sort of earlier yesterday. There've been two big crises that Zeta has gone through since 2017 to today. The first one was in 2017. We'd really rolled up a bunch of email service provisioning businesses, and we were running them in a bit of a disparate way. And we had an acquisition component to it, but we saw that our platform was not where the puck was going. I'll use a hockey and analogy this week after the U.S. won both men's and women's gold medals, which was pretty exciting. Uh, and we had to make a decision. Were we going to continue to try to, fight the tape, so to speak, and do what we were doing? We made the decision to architect an entirely new platform, which put artificial intelligence and data as foundational to the application layer. And then the next major sort of crisis that got us to where we are today is COVID. During COVID, we re-architected our entire business. And not only did we physically grow in that year, we have grown on a compounded growth rate of greater than 30% a year since COVID.
That's
So
remarkable.
it's just crazy. And, but the decisions we made in those two periods, the first one was AI and data as core. And then the next one was completely re-architecting the company so we could bring in resources globally, not just in disparate places. And really, even though we have many offices, we really run the business as a hybrid. And that came out of COVID. And, if you look at the business, obviously, last year, 30% profit growth, 44% EBITDA growth, 78% free cash flow growth, net income positive for the fourth quarter. And by the way, we're giving guidance to being net income positive this entire year. So, I think that when you look at the numbers, Nick, and we've talked about this in the past, the numbers are the outputs. The inputs are, is the business working? Are you solving your clients' biggest problems? Are you creating the type of return on investment that drives clients to move more and more of their business to us? In the lens that we've been growing an average of 30%, let me be clear, our industry has been growing at 10%. So we're growing at 3x the industry growth rate. And we're taking market share, right? When you can take a dollar of your client's budget and turn it into $6 to $7 in business, they're going to move more to you. And I think that's what you're seeing. And once again, the fact that we are initially guiding, we say initially because we've been public for 18 quarters. We've raised our guidance and beat our guidance 18 quarters in a row. I don't know who else has done that. in their first 18 quarters of being a public company. I'm not aware of anybody else who has. Uh, the interesting thing is that compounds. Because when you beat the first quarter, raise the first quarter, the rest of the year, and you do that every quarter, by the end of the year, you've like crushed the initial guide if you can continue to do that. So, for us to put out an initial guide of 35% at the middle of the range for this year with 40% EBITDA growth and 40% free cash flow growth, I think that just shows how confident we are, not just in the short term part of our business or sort of sustainability of our business. I think we see ourselves as a 20+% organic growth grower for many, many years to come. And that's because we are solving our clients' biggest problems. We are so far ahead of our competitors, both from a data ownership perspective and a technological perspective. And we're using every tool you imaginably can to continue to increase those leads.
Yeah, I give it to you guys because what I would do at this point is classify Zeta as a compounding machine. It's quite remarkable, as I mentioned previously. I have a lot of questions, so I'd like to get right into it. My first question, this one's on gross margin. Chris on the call said that you guys expect gross margin to expand by 1 to 3% each year until
Well,
2028.
actually, Chris said 100 to 300 basis points, but keep going. It's the
Sounds better,
same
when
thing.
you say 100
Yeah,
basis points,
it's
300
the
basis
same thing.
points.
Yeah, yeah. I'm
Can
just
you give us
joking.
some clarity on gross margins and why it's slightly lower than competition and what's your path to grow gross margin?
So let me clear something up. Our gross margin is not lower than our competition. If you look at a strict competitive landscape as Salesforce, Oracle, Adobe, yes, the gross margins are a few points lower. They're not materially lower. But remember, we have a meaningful component of our business that is advertising technology, that their average gross margins are in the 30s. So one of our big narratives is we are here to solve chief marketing officers' biggest problems. We don't focus on marketing technology or advertising technology or artificial intelligence or data or activation. We focus on all of it. So you blend to that low 60s% gross margin. What I would tell you is we have many products that have gross margins in the high 80% range, which are at or above our competitive landscape as it relates to CRM. And then we have some gross margins that are lower than that, call it 40s or 50s, not in the 30s, but 40s or 50s, that bring it into the 60s. So when you're trying to provide a total platform with one user interface, one reporting infrastructure, and the ability to create, maintain, monetize customers in one UI, one reporting infrastructure, you're going to have a range of margin based on the projects and the technologies that you're using there. So what I would tell you is that we expect to continue to grow gross margins between 1 and 3% over the next few years. And I think that's going to be a very sustainable thing. Quite frankly, a lot of it is because we're growing the business lines at the top of the range a little faster than we're growing the business lines at the bottom of the range. And you're seeing that uh, moving better. You're also, by the way, Marigold, which had a very healthy gross margin,
Yeah,
much higher than ours, is a tailwind. So
yeah.
that's going to help. But that'll blend in as that business sort of blends into our business.
So you see Marigold as a potential lever to help expand those gross margins over the next several
It's
years.
just it's not so much a potential leader. Its product lines are commensurate with our product lines that have our highest gross margin. So, if you think about it, today our sort of subscription component of our business is 56 to 58% of our revenue, whereas, a year or two ago it was in the high 40s. That's the highest gross margin business. So that's going to naturally just bring the business up. The other thing that is important to note is that we continue to grow our percentage of revenue on platform versus on integrated platform. And as you know, that's the real differentiator in what drives gross margin to the business. So once again, we feel like we're already in a good place. I don't remember the exact number, and I should be careful here, but I believe we've added about 500 basis points or 5% to operating margin in the last few years. And we're giving guidance to continue to add 100 to 200 basis points to operating margin every single year. So to me, that is more important than, is your gross margin stabilizing, going up or down very little? Now, obviously, gross margin is very relevant to operating margin, and we've driven it up over the years. But, we continue to do a really good job growing revenue substantially faster than we are growing expenses.
So, David, my next question here, I want to pivot. This one's quite topical with SaaS apocalypse, as some are calling it, and perhaps maybe the end of all SaaS companies. Let's talk data moat and Zeta's data moat. What makes
Yeah.
your database of first-party consumer intent data very hard to replicate? Why couldn't a competitor go out today and buy the same data that you have?
Well, you can't buy our data. It just doesn't exist. It took us 20 years to buy the platforms that create this data every moment of every day. So this whole narrative, you could go buy a database. Databases are worthless in a week. If you were did a particular credit card transaction or read a particular article or were searching a particular topic, you're probably long past purchasing that product a week later. We need to see a trillion signals a day. And remember, not only do you have 552 million global people opted into the data cloud with an average, Nick, of 5 to 7,000 data elements per person, including demographic, psychographic, every credit card transaction in the United States every month. I shouldn't say every, but the vast majority of credit card transactions in the United States every month. We have a tracking pixel, a first party tracking pixel that sits on trillions of pages that's ingesting everything people are doing from a signaling perspective. Now, all of that data synthesizes to our data cloud and then matches to our client's first party data inside of a private data ecosystem called a consumer data platform, or a CDP. And the algorithms are training exclusively on that data for that client. So they're getting really, really smart, which is, if you look at most of our clients, and people ask me all the time, how do you take a client from a 50 or $100,000 pilot to a $10 million customer? A lot of it is the secret that lives inside of that consumer data platform, because now we're getting every single new customer every moment of every day for our clients, and we're re-architecting everything they did to become a customer. We're re-architecting all of their demographic, all of their transactional, all of their location data. All of this stuff is telling us who else of the 552 million global people should we be targeting. And then when we target them, we track their entire journey, and it gets smarter. So back to the sort of the pilot to very large, we're usually able to lower a client's cost to create a customer by 50% in pilots. But what's then able to happen is we're able to scale them to this average of a 600% return on ad spend. So if you're spending $1 and we're returning you $6 in business, that's as good a transaction as you're going to do. And that's why clients continue to move large percentages of budget. One of the things I'm most proud of from last year is we had a net retention rate of 120%. Like, I talked to an analyst who said he's never even seen a company above 115. Like, like, like the benchmark is 100. Like, if you're at 100, that's great. We guide to 110 to 115. Last year we hit 120. That's because our clients love us. We're creating superior return on investment, and they're driving more business to us. So I just don't see the large language models coming into what Zeta does. We're just not seeing it. In fact, we think of the large language models, Nick, as foundational to the internet going forward. So if you think about the internet, I'm old, you're young. I'm old enough to have been running a company when the internet came out. Everybody said the internet was going to kill everybody. Walmart's going to be out of business. Target's not going to exist. Nobody's going to exist. JP Morgan Chase is done. All of that was wrong. What happened? Everybody adopted the technology. Same thing is going to happen here, in my opinion. You're going to have these incredible models. We already work with OpenAI. We've announced the partnership. We use Claude every moment of every day for our engineering. We use Git every moment of every day for our engineering. Every one of our global employees has access to Microsoft 365 at this point, Copilot. Almost all of our global employees have access to the enterprise version of either OpenAI or Gemini. I use both. And if you think about it, this whole narrative that the large language models are going to be able to just come into the enterprise software space. Listen, if you're running a pure workflow management tool, you might have a problem. Like these guys might be able to do that. But if you're creating intelligence, if you're the brain behind your client, and Zeta is the brain of our client's marketing system. Let's start with the three big moats. Data we've hit, right? But we never feed our data to any large language model ever, none. So the data is exclusive to our algorithms and training them. Two, return on investment. No large language model has any activation capabilities. They don't have any first party data of note. They have no tracking pixel at all outside of their ecosystems. It would be nearly impossible for them to replicate it. Uh, Most of the publishers certainly are not going to launch an OpenAI or other tracking pixel for a large language model. So, you look at that, you've got a 6-to-1 return on investment. And with Athena, it's going to go to 10-to-1. That's what I'm focused on. So now you're at 1,000% return on investment. I think that's game changing. And then third, one of the things people don't understand, and we do because 51% of the Fortune 100 use us, 24% of the Fortune 500 use us. Navigating a Fortune 500 company is nearly impossible from a business perspective. You have to get through their data security, data privacy, security group, procurement group, legal group, accounting group. Then you've got to deal with the CTO, CIO, CMO. All of those are very difficult skills to master. And at Zeta, we are exceptional at them. So, in addition to our human capital, which I think is the best in the world, and our platform, which I think is the best in the world, you've got the data, you've got the return on investment, and you've got the enterprise integration and management capabilities that I think are going to be impossible for large language models to do on their own. Now, that being said, we're going to buy their products. You know, AWS is one of our largest expenses as a company. When they came out, when Snowflake came out, we're also big partners of Snowflake. Everybody was saying, oh, they're going to kill enterprise software. All you're going to need is your AWS or Snowflake clean room, and you're just going to put an app on top of it. You'll run your whole business. How'd that work out? Right? What really happened is they became foundational to us. We certainly pay them a lot of money, but they allow us to scale faster and they allow our business to be substantially more efficient from a capital management perspective. And we've been growing our business substantially faster than we grow our spend with AWS. So, just to finish, I think that the large language models are going to be the same thing. We are going to buy their products and services. We're going to build platform on top of them. We're going to pay them real money, but they're going to then make our business more efficient and they're going to help us grow faster. Therefore, we're going to build a more profitable, faster growing business. I would go so far to say, Nick, that I believe the large language models are going to be a renaissance for companies like Zeta. Sorry to have gone in, but obviously
No, no,
this
that's
is
fine.
very topical right
Yeah,
now. There's
it
a
is
lot
very
of people
topical.
saying we're going away because of this, and it's ridiculous.
No, I completely agree. I believe that the market is mispricing the value of first party data. Zeta has a very strong first party data moat, from my opinion. And you've just highlighted that fact. So I kind of want to move over to one more question here. This is a forward looking question. We've seen some of the competition within the mobile ad tech space develop some mediation platforms, which have attracted the likes of Meta and Google to bid for ad space. Looking forward beyond Athena, is this something that Zeta Global is interested in developing, maybe for omni-channel marketing, some sort of
Are
mediation
you talking
platform?
about like AppLovin and
Yep,
those guys? Oh, I mean, first of all, Adam's built an incredible company, and he's a great guy. Like they've got. If you ever want to feel good about Zeta's volatility, go check them out. But what I would say is the thing that Zeta does that's actually quite similar to that is we're very outcome based for our enterprise clients. Yes, we're charging a SaaS fee. Yes, we're charging a utilization fee. But everything we do backs into an outcome, just like everything AppLovin does backs into an outcome. Now, they're more transparent about it because it's more of a marketplace. I don't know if he calls it a marketplace, but to me, it's a marketplace, right? He's
correct.
sort of got a very, very powerful engine that's able to maximize return on investment across a marketplace. And our platform does the exact same thing for large enterprises. So, us moving into other verticals like gaming or other things are certainly things we can do in the future. Yes.
That's awesome. Okay. So to conclude here, David, looking forward 5 years from now, where do you see Zeta Global sell that vision to the retail investor?
I think we are building the disruptive company of the artificial intelligence era in marketing. And I think we are going to be, and I say this not lightly at this point, the defining company of the future of marketing and AI. And it's already happening. If you take our just base level goals of a minimum of a 20% organic growth rate, out through 2030, if you even just do it through there, it took us 16 years to get to our first billion in business. So we hit a billion, 5 million, can't forget that 5 million in 2024. This year, this is 2026. This is not 2030. This is 2026. The middle of our range, we're going to do 1.755 billion. That means in the 12 months from closing 24 to the opening of 26, going into 26, we're going to grow our business by 75%. So if you continue to do that, then you've got to be able to focus on how does that growth continue to compound going into 28, 29, 30, 35. I can't tell you exactly where I'm going to be in 5 years, but here's what I can tell you we are going to get to. We are going to be a $10 billion revenue company with a 30% operating margin, with at least 75% of our EBITDA converting to free cash flow in the years to come. And by the way, all I have to do that is get from 1.3% of wallet share to 6 to 7% of my clients' wallet share. That's it. I don't
It's
have to go
remarkable.
reinvent the world. I don't have to go get 10,000 new customers. I just need to do that. And I believe the biggest thing to get us there is going to be Athena. It's going to be how Athena helps the client. Just to end on this, today, Nick, we've built a 747. Our clients know how to fly a Cessna. If they could fly the whole 747, they would get there much faster, to use the analogy. So, by way of example, they're getting to 600% return on ad spend inside of the Cessna. If they used every component of the 747, it would be multiples of that. But what Athena is going to be is it's going to be your co-pilot to move from the Cessna to the 747, so you can now navigate much more of the platform from a return on investment perspective. And that's how I think two major things accelerate. I think it accelerates the growth of One Zeta, which, as you know, has an approximate 250% average greater spend per client who's One Zeta versus one use case. And it's going to drive substantially higher return on investment through the different use cases of our clients. So I would tell you that 5 years from now, Athena will have been the game-changing breakthrough in how the future of marketing operates.
David, thank you for coming on. This has been great. Keep executing. You guys are doing a fantastic job.
Well, our goal is to be sitting here with you next year, Mr. Zeta, and talking about our 22nd consecutive beat and raise quarter.